Hi guys, it is Pila here. Um, Today guys, I want us to focus on risk management specific. I want us to focus on the risk management. First of all, whatever you're going to be doing in the market, you need to protect your account. There's no way that you're going to be profitable or you're going to become profitable if you cannot manage your risk. I'll just make few examples here. One, two, three, 4, 5. You take your entry here. You get 1,000. Yeah? Let me just write. It's fine. Erase. You take your entry. You make 1K. You take the second entry. Second entry. You make 2K. Your account is growing, by the way. You take the third entry. Third entry. You make, let's just say 2K as well. You take the fourth one. You make 3K. 3K. The last one, let's just say, 3K as well. Now, what is important here, guys, that you have to understand? Your risk here was 200. For you to make 1,000, you decided to risk 200. And that was just a small trade. That was just a small trade. Um, with 1,000 account, 1,000 account, 1,000 rand account, how much opportunities are you going to get in the market? You're going to have 5 opportunities. If per trade, you're going to risk 200. All right. So each trade you are taking, you are risking 200. Same thing here. You risk your 1,000, you gained 1,000. You came back again. You risk another 200, you made 2K. Same thing. Imagine what you guys are doing. You'll start risking the 1,000 nicely. I'm sorry, you'll start risking the 200 nicely and make that 1,000. You come again, you risk 200, you make 2,000. This is how your mindset is. You come again, you risk another 200, you make 2,000. Already you have 5K now in your account. What are you going to do now? You got 3 correct trades in a row or 3 profitable trades in a row. When you come back here, you might risk the whole 5K, expecting to make a lot of money. And it happens that this one's going to be against you. Now you can't come back for this one because already you risk everything oyenza ngaphezulu. So for you to become profitable, you need to understand that whenever I buy or whenever I sell, I must have a room to come back in case things don't go according to my direction. Do not risk everything in your account. As soon as you start risking everything, what's going to happen? You'll end up believing that the strategy or the pattern that you are using is not working in the market, of which it is not true. Of which it is not true because of you will gain confidence after receiving this 5K. Coming back for the fourth trade, you'll start risking more because of you seen that the pattern is working or the strategy is working. Unfortunately, here the market's going to be against you. Remember, there's nothing 100% in the market, and you'll never know which trade you're going to take that will be against you. So therefore, it is important for you to always have risk management in everything you do. That is why I always say, guys, whatever we do in the market, let us prepare in advance for our entries. I make an example here. Support, this is going to be your support. Here is your resistance. You notice that the market is going for the resistance. Now the market is coming back for the support. You prepare for the entry. As the market is going up, you open your chart, you notice, oh, the market is going for the resistance. You prepare for the resistance. The market hit the resistance. Already your trade is prepared. You know how much you're gonna risk. You know where you're going to exit. You are done with the trades before you start selling. You don't just come in and sell here. You don't know how much you're gonna make. You don't know how much you're gonna risk. You're just gonna jump in here. Do not approach the market that way. Coming back for trend lines. Trend lines are very straight to the point. You prepare. Here is your first time touch. Here is your second time touch. Now you have a trend line. What do? You wait for the market to come back to the trend line. Then this is where you're going to take a decision to buy. You place your stop loss below. You check your left-hand side for your take profits. You are done. The trend lines are straight to the point because of you prepare. Now you know you have the two connecting touches that confirms that we have a trend line, and then we wait for the third touch. As we are waiting for the third touch, you prepare for your entry. How much am I gonna risk here? Where am I going to exit? What is it that I have that can cause the market not to go to my direction? I'm not sure if you get the point. You ask yourself so many questions in advance. You prepare, and if it happens that you notice something that you don't understand, then feel free not to take that entry. Because if you are not sure of what is going to happen because of whatever that you noticed. But if everything it is clear, then why not take that trade? Going for supply and demand. I told you guys that supply and demand is always in the beginning of a new trend. They left here is the downtrend. As they're going up, they left the supply and demand there. You wait for the market to come back and test, and then you buy. You'll still prepare because of you'll notice that, oh, there's the supply and demand there. I have to wait for the market to go up and come back and test so that I can buy. You start buying. You don't just buy in because of you notice that the market is going for the supply. No, prepare for that trade. We go for those who are trading PCP. PCP is straight to the point. You notice your PCP. I told you that when we trade PCP, we focus on the base specific. So what you do here, you prepare. Here's my continuation pattern there. What am I supposed to do? I have to go and check and confirm with the trend that the market is going down. If the trend is confirming that the market is going down, there's nothing that we have that can cause the market to change the direction. You are ready to get in here. What do? You prepare, you wait for the market to come back and test the base. You know that how much you're going to risk and where you're going to exit specific. So, uma sibuka wonke lama pairs lawa, they have one common thing. They have one common thing. And if you check with what is it that is common here, you just have to wait and prepare for the entries. You just prepare for the entries. Doesn't matter whether you trade supply and demand, you prepare. You trade trend line, you prepare. You trade supply and demand, you prepare. You trade PCP, you prepare. There's no pattern that will allow you just to jump in just because of you feel like jumping in. We prepare for the entries, guys. And for you to prepare for the entries will allow you to risk less. And let's say, for an example, it happens that the market goes to your direction. You are working. You hardly get time when you're at work. You hardly get time to check your chart. What you can do, let's say you decide to sell today in the morning. During the day, roughly during lunch is around 11 to 12 or 1. Depends where you are working. Around the lunchtime, go to your chart. If the market moved away from the area where you decided to buy, check the current trend through all the time frames. What is it that you have here that can cause the market to come down? If there's nothing, trill your stop loss. Don't make it closer to the current price. Trill your stop loss in case the market will go against you and then you can't even see. So in case the market decides to be against you, you'll protect whatever you have made already. You are not going to take any loss if you're gonna approach the market like that. So whatever we do, let us focus on them. My phone is ringing. Thank you. Sorry, guys. Sorry, guys. Sorry, guys. Sorry, guys. Just 1 minute. 1 minute. 1 minute. This call is disturbing, guys. But it's fine. Let me put it on silent. All right. Let's go to the chart, guys. Let's go to the chart. Let's go to the chart. Remember, guys, it doesn't matter what you are trading, right? It doesn't matter what you are trading. As long as you know what you are trading in the market, focus on that. Focus on that. So we are not going to check a certain pair specific, but we'll use what we see on our chart. I'm on 1 hour chart right now. The market was going up. It was an uptrend. You can see that the market turned here, it went down, it went up again, it went down. You notice that, oh, here I might have a trend line. Starting from here, moving to the right-hand side. It means your job was to identify this one as your first time touch. And then identify this one as your second time touch. Now, what is your job? What is it that you have to do? We are talking about risk management right now, right? So you notice that I said, guys, when we approach trend lines, we buy accurately on the trend line because of we do not use the candlesticks. We buy accurately on the trend line. So as we buy accurately on the trend line, what do? We wait for the market to come back here. Now, once you notice that, okay, let me remove this one first. You notice that, okay, the market is coming down towards the touch. If you move to your left-hand side, what do you see? You see a support zone. This is your support zone. This is the support zone. Can you see that? Why do I call this a support zone? It is because of the market will accurately turn on the body of the candlestick. Sometimes they will penetrate inside the wick. So I'm covering the body and the wick like this. I'm covering the body and the wick. Let's move from the left-hand side like this. It's fine. Now, if I covered this support like this, support again, it means to me when the market comes back to test the trend line, we must have a room to place our stop loss below. Why? Because of here we have a buy zone. Should it happen that the market will go below, that means the market is no longer respecting what? Respecting the trend line. Why am I focusing on this trend line specific? It is because of the support comes from the left-hand side. We have the first touch, we have the second touch here. So the higher the chance that the market will come back to test the trend line, not because of the support, but we can use this one as our support zone. Hence, it is here. Remember, guys, we use what they presented in our chart. We don't just jump in just because of we feel like, the market's going to do this and that. No, we jump in based on what we see. We jump in based on what we see. We can see here we have the support zone and the trend line. Mainly, we're focusing on the trend line. Here's the first touch and the second touch. This trend line is very much clear. Now, what to do then? We're preparing for our entry, right? If I get in here, how much am I going to risk? Let's say that's your 200. We're still going to focus on the exit point. Right now, if you move to a previous trend, use your line chart. Confirm with the touches. You notice that, oh, we have several touches there. 1, 2. I'm not going to count these ones. 1, 2, the market went down. It went up again. According to my experience, what does this mean to me? It means we're going to break when we come back to this level. Therefore, I have to find myself looking for a higher take profit compared to this one. Because why? We will break this one. So, or if you want to, let's say for an example, you don't want to look greedy, you can use this one as take profit one, right? Take profit one in case you are not sure of what might happen. But for me, I know that I was not going to focus on this one specific. So we are done with this one. We are done with this one. As we are done with this one, what is it that we have to check? We have to go to the previous trend, starting from this breakout. Why? We need to find something that we have here that shows that the market might respect and change the direction. Can you see here? You have something like a breaker structure. Let me just erase. You have something like a breaker structure here, moving to the right-hand side. Can you see that? We are looking for things like this. What is it that I have that can cause the market to change the direction? Or someone might say, I see a break of structure, but for me, that one was not going to be that strong. Instead, I was going to use that trend line up there. That trend line up there. Imagine now let me just erase everything, still fine. Now I'm talking to those, again, who don't have a trading strategy in the market. I once said trend lines are very much profitable and you can trade trend lines almost every day. This is 1 hour chart. Already you trade trend lines, right? You identified this one long time ago. You identified this one long time ago. You were just waiting for the market to come back and test this one, right? So what you did, you can see this is your second time touch. Straight to the point. This is your second time touch. Now, let's move to smaller time frame a little bit. There's something that I want to see here on the left-hand side. Let's use a line chart. This one is not that strong for us to use it as a strong support. It's not that strong, so I'm gonna ignore it. So now you decide to buy on this trend line. What do? You know, okay, fine, this is where I'm going to exit on the trend line. Why on that trend line specific? Remember, I trade trend lines in the market. So when I trade trend lines, it means when I see another trend line, I must exit my trade, and look for another trade. Already, you identified these two. As the market is pushing up, you are there preparing for this one now. Okay, fine. Now, we're doing the other way around. Now we want to sell. As we want to sell, what is it we have that can cause the market to continue to go up? We're moving to the left-hand side. Let's go to 4-hour chart. Let's go to 4-hour chart. On 4-hour chart, what is it we have that can cause the market to go up? Is that supply and demand. And that supply and demand, guys, it is a bit far. It is a bit far for us to be worried about it. So the best thing that you can do, you can just move back to your smaller time frame because you don't have much here that can cause the market to continue. So what you'll do, you go back to your time frame. Imagine I'm coming from 4-hour, 3-hour, I'm on 2-hour chart. Still, there's nothing that I have that shows that the market might continue to the upside. And remember, even if the market continues to the upside, I find myself taking losses, the market will come back to the trend line. And then we go up again. It is that simple. If you prepare for your entry, you will know that if things don't go according to my direction, what am I going to do from there? You see, so this is how you prepare. Now we want to sell. Already we are out of this uptrend. We are looking for sell opportunities. What do? We move back, we check for possible things that can reverse the market. We check, there's nothing there. I give the market a space to breathe. That will also depend on what? That will also depend on the broker that you are using. That will depend on the broker that you are using. If your broker has a huge spread, adjust your stop loss as well. Now, coming back to this one, the market has broken this one. It went up. It came back to test this as a support and resistant. So here is your resistant. It was broken. It was tested as a support. So they decided to break that support there. The market went down. Now, if the market goes down, where is your exit point? Let's go back to 4-hour chart. Let's go back to 4-hour chart. 4-hour, let me erase everything in. Okay, let me remove everything. Fine. Now, the market is coming from the trend line. It is going down. Looking at this previous trend, what is it I have? I have a support there. I marked the zone. Remember, I explained the zone part, right? So this is the support. Use your line chart. You'll see that the market gave us the support there, and then the market went up. What we do here again, we wait for the market to come back. So we got our entry there. This is 4-hour chart. Everything is clear and visible. We then move to 1 hour, around 2. Moving back to that 1 hour, our entry. Our entry looks like this. Give the market a space to breathe. Your exit point accurately on what? On the support zone. Yeah, done. Here, you had a chance to step in and buy here and allow the market to move inside the buying zone. And then your exit point was up there on the trend line. Imagine you exit and you enter again, trading the same thing. You exit, you enter again. This was for trend lines only for now. And then let's look for the support and the resistance as well. And if you do have questions regarding what I am sharing here, feel free to leave a comment for me so that I can make a video based on what you are asking. Uh, let's move again. Let's check if we do have a continuation pattern that we can use right now here. No, I do have one on my left-hand side. So the market is going up, right? We can all see that the market was going where? It was going up. They left the continuation pattern there. As they left the continuation pattern, let's count the candlesticks. It's 1, 2, 3, 4, 4 hours. Your job was to wait for the market to come back and test the continuation pattern so that you can buy. And the market went up. So when I say you prepare, this is what you do, guys. Here's your continuation pattern. What was your job? Your job was to prepare for this continuation pattern. If you look at the candlesticks below, what is it they did? They tested the previous resistance. This is your resistance. It was broken. It became the support here. Now the market came back to test what? This continuation pattern. It means if you wanted to take your entry there, your entry was going to look like this, and then your stop loss was going to be below that support because of this is very much closer. And then you know that my stop loss is somewhere out there. We will check again. We will check again. The reason why I am placing my stop loss below, it is because of here you have a support that is close. The market might come down to this support with a wick instead, and then it continues to the upside. The body will end here accurately. So the best thing that you can do, wait for the market to come down. If the market's not coming down, you are still fine. If the market continues to the upside, move your stop loss below. We are done. Should it happen that the market goes against you, you know that, okay, I'm safe. Let's move back to 4-hour to find our exit point. Let us remember, guys, our exit point will be based on our left-hand side. So right now you notice that, okay, this is where we got the continuation pattern. The market is going up. As the market is going up, our job is to move to the left-hand side. So if we move to the left-hand side, we get a zone there. This is the zone. That means your exit point was going to be here. Then we are done with this continuation pattern. There's nothing hard here, guys. Everything is simple as long as you simplify it yourself as well. And if you want to make it complicated, it will become complicated as well. This is simple and easy. Use your line chart. You'll notice that here you have a support. This is 4-hour chart, guys. This is 4-hour chart. Here we had a resistance that was broken. It was tested as support here. The support was broken. It was never tested as a resistance. So this is the first time the market comes back to that resistance. So that's going to be your exit point. Those who are trading support and resistance, they will be looking for what? They will be looking for entries going to down direction or entries going to the downside. Guys, the only thing that you need in the market is to understand what you are trading and why are you taking your entries there specific. You can't just say, I am a trader, I trade price action in the market. Yes, price action is big. What are you trading specific? I made an example of trend lines here that you got in from this trend line, you exited from that trend line. You are trading trend lines only in the market. As long as you want to mix many things in the market, you will struggle. You will struggle because of you will look for this pattern. If this pattern is not working for you, you jump to another one. If it's simple. I mentioned that I use 4 patterns in the market. You can choose which one you prefer from these 4 that I use. Let's go to 1 hour. This is what I was explaining to you guys. This is what I was explaining to you. You can spot the first time here and the second time. And then you know that we trade trend lines, right? We wait for the market to give us the dead touch so that we can buy. The market came closer to the trend line, and then it went up. And then the market pushed all the way down, and then the rejection. Can you see that? Now, if it wasn't for this support zone, what was going to happen? The market was not going to penetrate like that. Let's highlight the support zone. This is the support zone. That is why now you'll see that penetration. So when you trade support and resistance I'm sorry, when you trade trend lines that are next to support and resistance, you need to be careful for things like this. You need to be careful for things like this, knowing very well that if you're going to buy there and place your stop loss a bit tighter, the market might go to your might go straight to your stop loss and move to your to the right direction. Not only because of a you were wrong, but because of the support zone. You can see that the market went more than 50% to that zone. So imagine if your stop was tight. And if we move to 15 minutes, we're going to have another trend line. Let's verify. This one appears on smaller time frame nicely. It's the same thing again. Now the support looks straight. Here is the support. Here is the support again. How many touches we got from the support is 2 touches. But if you go deeper on this one, you trade trend lines only. Here is your first time, here is your second time. If you did not see this trend line, you're going to see this one. Look at these guys. Remember, I said to you, whatever that they do, it's something that was created in advance, something they created while they were going down. Example, this first time touch was for the continuation pattern here. Can you see it? And the broken trend line as well. Now, when the market came back for this one, the market went up. As it was going up, it came back down a little bit, and then it went up. As it was going up, what is it? We have a continuation pattern that pushed the market down. As the continuation pattern was pushing the market down, the continuation pattern was pushing the market towards what? It was pushing the continuation pattern towards the trend line. Let me erase and show you more. If you look closer here, we have this wick that tested the trend line. And then they went up. You can even see that this red candle that you see went up. And then they push the market down again. And then they pushed the market down towards to the support. From this support now the market is going to the upside. So guys, whatever we do in the market, let us not just rush to buy or rush to sell. Let us wait for everything. Let us wait for everything, knowing very well that, okay, here we're gonna, okay, knowing very well that here we're going to buy. We need to observe the left-hand side. The left-hand side is very much important for us to deal with the risk. Knowing very well that, okay, fine, here, I know that, okay, from here to here, it's a buy zone. My stop loss must be below. Let's make another example. On our left-hand side, we have a trend line. This is a moving trend. We have a trend line. It looks like that. First time, second time. Already, if you check, this is your support. So these are the trend line that you need to be aware of. For an example, if you use this one, even though my line is not that straight, it is a bit different when it comes to placing the stop loss. This one is not next to any support. This one is next to the support. You need to be careful when you trade trend lines that are next to the support. You must always think of something like this to happen in the market.